The US Treasury is doing quite a bit of housekeeping right before the end of the year. They're out of AIG almost entirely. Now General Motors is going to buy back just a piece of their stake, and they've said that the Treasury has said we're going to be out in 12 to 15 months. It's not quite the watershed it seems, though. Right?
No, look, I think if you're General Motors, you'll be very happy at this. The government owns more than a quarter of GM and has done since the IPO.
Yep.
And GM's been pushing and pushing and pushing. Please let us buy back some of this stock. People call us government motors. It looks terrible, of course.
Right. And they, well, of course, there's some executive pay restrictions as well.
Yes. Once the government is completely out, executives will now be able to get paid properly. Right. And remember, Alan Mulally at Ford is getting sort of $40–50 million a year at the moment for doing a good job. And let's be fair, GM has done a pretty good job since the IPO and since coming out of bankruptcy in 2009. So there's no reason why these guys shouldn't be remunerated for doing a good job. But that's not the reason for the Treasury to sell it. Don't forget, by selling this stake, it's going to be taking about a $5 billion loss.
On this chunk, which is, well, what is it, a little over a third of what they still have?
Exactly, yes. But yeah, exactly.
So they're selling at $27 a share?
Yeah, $27.50, so it's a premium, it's almost an 8% premium to yesterday's closing price.
And what, by your calculations, is the break-even for Treasury right now?
Well, beforehand it was about $53 a share, so almost double, and this now takes the remaining 300 million shares break-even, well, to get a break-even on the entire amount that was given at the beginning.
So the new break-even
they'd need to sell the remaining shares at almost $70 a share.
Right, so how good does GM have to get in the next year?
Oh, that's not going to happen. I think that GM basically should be trading higher than where it is, regardless of the government stake. In fact, the government stake really isn't doing a great deal. If you look at what the government is paying, that equates to about 7.4 times next year's consensus earnings estimate. So Ford's trading at about 8.
Yeah, so
and that differential is fine. Ford's got it actually earns a bit more money. It's got slightly better margins, and it didn't get government aid, and it's done all the turnover with
so
roughly
it should
the
trade
same
at a little bit of a premium.
So it should trade at a premium. Now, but actually, I would argue that both of them are trading below where they should. Europe's a problem for both of them, but they're still earning pretty good money. So I think they're undervalued. But actually, GM's undervaluation has nothing to do, or very little to do, with the Treasury stake.
Right, and more to do with still getting into their stride after the IPO.
Now, of course, don't forget, 3 months ago, Treasury refused to sell 200 million shares to GM. So something's changed in the interim. I'm guessing, since they're selling at a loss, an election win, maybe? I don't know.
Election win, and just, well, and I'm sure they want to get shot of all this stuff and try to say this whole lot, AIG, everything is some sort we've broken even or made a bit of money. They've already said in the release today. They said that we've got back 90% of the money that we handed out in TARP, if you include adding dividends, interest payments, everything. So they're certainly spinning it well. And you know what? At some point you've got to get out of GM, but I frankly think they probably could have waited. All right, we'll leave it there. There's an end in sight for the Government Motors nickname, and we'll have more breaking views tomorrow.